Hello and welcome to Moneylife. This is Sucheta Dalal. This week we are talking about the enormous charges that are being leveled against Madhabi Puri Buch, Chairman of the Securities and Exchange Board of India, from multiple sources. First, of course, the Congress Party held a press conference yesterday, which is 2nd September, a follow-up conference today with fairly explosive revelations and a bit of ping-pong going on between ICICI Bank and the Congress Party over these revelations. Not to be left behind, Subhash Chandra Goel, the founder of the Z Group, has also held a press conference making a series of charges against Madhabi Puri Buch in a separate press conference altogether. Has nothing to do with what the Congress Party says, but the combined effect is enough to increase the turmoil over the role of the Chairman of the Securities and Exchange Board of India, who is a market regulator, which is issuing penalties and regulations every single day for thousands of listed entities, intermediaries, market infrastructure institutions, and yet the questions that are raised by the chairman's own investments are quite stunning. So, what the Congress Party did yesterday is hold a press conference by spokesperson Pawan Khera, where he produced a list of documents about how Madhabi Puri Buch continued to earn what he calls a salary, ESOPs, as well as TDS. So the bank was paying TDS on the so-called salary. If you ask me, since they have not put out documents, except their own press release, everybody is a little confused between what is the salary, what is the encashment of ESOPs, but no matter what, it is scandalous enough that someone has moved from the private sector to the Securities and Exchange Board of India, and apart from the conflict of interest allegations made by Hindenburg, allegations made about the company which is dormant or not dormant, which we have talked about in a previous video blog, this is a set of new allegations, which is that Ms. Buch continued to earn over 16 crores in the period that she joined SEBI 2017 to 2024, and this is over 5 times what she has earned as the chairman of SEBI. In fact, these revelations are so startling that all of us who have been covering the market for over 35 years, including market veterans, were so skeptical. Somebody even said Congress has fallen prey to deep fakes. But turns out that they have regulatory filings, and at the end of the day, when ICICI Bank issued an official response, it actually raised more questions. ICICI Bank said this is all her retiral, they call it, which is retirement benefits accrued from the time when she worked with the bank and then quit in 2013 as the head of ICICI Securities, a brokerage firm and subsidiary of the bank. Far from settling anything, it has only deepened the intrigue, raised crucial questions about conflict, and more importantly, absence of disclosure norms when a private sector individual is appointed to a top government position as a regulator in a highly speculative environment, which means the standards here are supposed to be much higher than others. So let me give you a gist of allegations. The initial allegations made by Mr. Khera were that she earned a staggering 16.8 crore, which is about $2.1 million from the ICICI group. Like I said, a combination of salary, proceeds of ESOPs, tax benefits, and this was 5 times her earnings in ICICI Bank. Now here's a table that we're going to show you. It's a full breakup of what was earned year after year. What you can see from this table is that there are salary earnings for certain years stop from 2021 to 2022. Then there is a separate stream of income from ICICI Prudential. And this is important because ICICI Prudential, and it's not the AMC, it's obviously the insurance company, is completely silent, hasn't said a word as yet as I record this video. Then there are ESOPs from ICICI Bank, where again, the claims are from 2021-22 and go on for another year. Then there is TDS and there is salary. What is all this? We will know if there are documents. ICICI, like I said, issued a press release which only confounded the issue. in a nutshell, it said this is all retirement benefits. So the Congress held another press conference this afternoon and raised new questions. What it says is very interesting. It says that ICICI Bank's ESOP policy is available only on the US Securities Exchange Commission website. This is called EDGAR. They've given a link to that website. That policy says that an employee can exercise ESOPs with a maximum of 3 months after voluntary retirement, and that this is contrary to ICICI Bank's disclosure to stock exchanges that an employee can exercise ESOPs for up to 10 years after leaving the company. Now there's a catch here, because the document that was uploaded has another clause which says that commencing from the date of vesting, the period of exercising ESOPs will expire on the completion of a period not exceeding 10 years. This 10 years can be from 2017 to 2027, or whatever is the period of vesting from 2013 to 23. But the catch is, who gets this will be decided by the Board Remuneration and Nominations Committee for each grant, each one separately. So Congress's allegation that a special case was made for Ms. Buch seems validated by this little clause, because the 10 years is also true, the 3 months is also true. The 10 years has a catch. Is it a special case? Because it's not 10 years for everybody. In fact, there are lots of bankers and people in the IT sector who say that 10 years is an excessively long period, and that's going to be the subject of debate over the next few days. It is also questioned how retirement benefits can be significantly higher than the last drawn salary of an individual. Like I said, we don't know details because we have not seen documents. We are putting out the allegations. They're scandalous enough. It, just as in case of Hindenburg, the documents are not fake. There is payments being made. This is accepted even by ICICI Bank, which means that she continued to get money from ICICI Bank from 2017 to 2024. It's the 7 years when she was chairperson of ICICI Bank. Now, you may not realize this, but this is highly significant. Doesn't happen anywhere around the world which has a serious stock market which is taken seriously, right? So here's a table that was put out by Pawan Khera today. You will see the earnings, what has come from various places. This time they have only one 2013-14 payment from ICICI Pru, but frankly, someone needs to come clean about it. It's a question of transparency. So what is the crux of this whole issue? Why is it such a scandal? Why is everyone shocked by it? The issue is that disclosure rules governing the senior-most officials of regulatory bodies, given their access to unpublished price-sensitive information, has to be out there in the public domain. Their orders and decisions dramatically affect stock prices, raising the stakes for this kind of disclosure and compliance norms. So take an example. A negative order against a listed company could lead to a fall in share prices. It could also lead to an opposite effect in its competition. Now, how do we know that someone who has access to this and shareholding in that particular entity is not taking advantage of it to encash, say, ESOPs? We don't say she's doing it. Where are the disclosures? Who's monitoring? Who is it being reported to? So what has the rest of the world done? Well, first of all, I emailed the Human Resources Chief at SEBI and asked whether disclosures of encashment of ESOPs are made by the chairperson every year. Are there any restrictions where the SEBI chair and whole-time members can encash ESOPs? Now, why am I asking about these restrictions? Because under the LODR, Listing Obligation and Disclosure Rules, there are clear windows in which nobody can trade because senior executives in charge of, say, accounts, finance, top management, board of directors are supposed to have access to unpublished price-sensitive information. It's called UPSI. So disclosures are made. In fact, even when they sell significant stakes, you would have seen disclosures which are put out by the exchange. Many of you who are watching this are traders. So if this is expected from listed entities, shouldn't we expect a lot more from the SEBI chairman and whole-time directors? In the past, it didn't matter because they were cadre people. They were all government officers, some of them on secondment from income tax, ED, what have you. Now you want lateral entries from the private sector where they earn humongous amounts of money and they are moving through a revolving door to a regulatory position. The idea is when you come to a regulatory position, you make sacrifices, you make disclosures. The world has dealt with it. The first chairman of the SEC was a broker, Joseph Kennedy. So right from the beginning, everybody has rules about what happens when a high earning private sector individual comes to lead a regulatory organization, because there has to be transparency, there has to be disclosure, and they have to be seen to be transparent with absolutely no questions to be asked about whether or not there is a bias, whether or not there is a vested interest. You have to have a clean slate. It is a sacrifice that you make, otherwise remain in the private sector. Why does SEBI as an institution that is 32 years old not have such a robust mechanism in place? They have two sets of rules. There was one in 2001, there was one in 2008, updated in 2015. Yet all the former SEBI people that I talk to are cheerfully ignorant about the strenuous implications, especially at senior levels. Now let's look at what the world does. Global standards, stark contrast. Internationally, the standards for managing conflict of interest among regulatory heads are stringent. The US has general rules of conduct, which in a nutshell say, you shall not hold financial interests that conflict with the conscientious performance of duty. If you ask me, a large group like ICICI listed with multiple listed entities leads to conflict. So what are heads of regulatory bodies in developed countries supposed to do? They are required to divest any direct holding. You cannot keep claiming ESOPs and salary for 10 years. Doesn't matter what the rules of the last organization said. You have moved to a regulator, so you had to divest direct holdings that could post conflict of interest. In fact, so much so that they do not even allow sector-specific mutual funds. Also, assets that cannot be easily divested are placed in a blind trust which is independently managed, so you have no say on what is happening there. The chairperson of the US Securities Commission has even stricter rules regarding conflict of interest, investments, financial disclosure due to the power and influence of the job. That is exactly what we are talking here in the case of Madhabi Puri Buch. In many cases, the financial disclosures are made public to ensure transparency and allow external parties to monitor conflict of interest. Here, we don't even know. We have been told, remember, after the Hindenburg allegations, that recusals were made. The board said everything is all right. The finance ministry said we have nothing to say after that. This cannot go on. Now, let me give you a concrete example. Hank Paulson moved from Goldman Sachs to head the US Treasury. He was required to sell his investments in Goldman Sachs and other entities which were valued at $700 million. He had to sell them. You want the treasury job, you will have to sell. The only concession was deferred capital gains if reinvested in government securities or mutual funds in 60 days. So specific broad-based mutual funds and government securities. So what am I saying should have happened in SEBI? She should have encashed all those ESOPs before joining SEBI in 2017. You cannot, there is no question of salary. This is salary, pension, whatever. Everything had to be encashed. It could not have gone on because that is the price you pay for wanting to be with a regulatory organization. India's regulations are ambiguous. The Central Vigilance Commission's manual, last updated in 2021, offers little more than a vague guidance, cautioning against frequent speculation in stocks and investments which are likely to embarrass or influence the official's duties. SEBI has taken note of them. There were some regulations in 2015, but SEBI officials say that they were told orally that they can't invest in stocks and mutual funds, and most of them don't. So I want to know, if SEBI officials down the line don't have these investments, how many of them have moved to SEBI? Very few. Like the chairman has, there are some WTMs who have, there are some at ED levels who have. What are the rules applicable to them? Have they been asked to divest their holdings? Have they been asked to put them in broad-based mutual funds, government securities or fixed deposits? And if you don't want to do that, please remain in the private sector. So the elephant in the room is this absence of codifying rules for conflict of interest, which has not come out on its own as a discussion paper which requires to be fixed. It has come out as a series of allegations, first by Hindenburg, which talked about offshore investments, which were, remember, redeemed only after she became a whole-time member. Then her private companies, which remain alive, which keep earning money right till 2024, an advisory company. And now third, the salary that she continues to draw, apart from that 99% holding that Hindenburg told us about, the salary, ESOPs and TDS that is coming from ICICI Bank, where she worked for several years. So, controversies involving trading and investments by senior SEBI officials date back to the 1990s. I have written about it. I have interfered in some of them. I am stunned to think that 25 years later, quarter of a century, there is still a controversy. There are no clear rules. I've been covering the market since 1984. And I find it hard to believe that SEBI has not put these in place. It's part of IOSCO. It has had controversies internally. This cannot happen by chance. SEBI's rules on transaction shares require all officials to disclose their shareholding, that of their families, within 15 days of assuming office and at the end of each financial year. So there are rules. Significant transactions must be disclosed within 15 days. WTMs are not even allowed to trade on the basis of UPSI. But who's monitoring it? If disclosures remain confidential, then who's looking at conflict of interest? And I don't know what any of you think, but I find it hard to believe that a vigilance official or a HR head is going to be able to question a whole-time member or the chairperson of SEBI. We would have had more confident statements coming out of SEBI. We have silence from Ms. Buch as well as SEBI after this new set of revelations. And the Congress is not done with it. The Congress has said this is just the beginning. We are ready to come and hold a conference every day with new details as SEBI, as Ms. Puri Buch and others answer the questions that they have raised today. So charges from Hindenburg research, charges which was called anti-national, charges from Subhash Goel, you can say, okay, SEBI has orders against him, charges by the Congress party, leading opposition party, and now the regulatory body is mired in such controversy that it needs a clean-up. It underscores the need for SEBI to re-examine internal policies, ensure that it meets rigorous standards, and maintain public trust. But it cannot happen with the same person leading this. And remember, for the last week or so, she has been addressing meetings to say, there's nothing wrong, it's business as usual. And in fact, more and more is coming out, which is controversial. Any government has to put the capital market and investor interests ahead of protecting individuals. The government has remained silent. As the Congress says, the appointments committee which gave her the job has remained silent, and nobody is telling us what were the checks. Did they check anything at all before she was appointed? Doesn't seem like it. If you agree and you think this is a matter of concern, share this video because it's important for all of us. Thank you.